We're in the middle of summer here in northern Indiana, which is a great time for taking vacations and maybe slowing down a little bit. It's been hot. The weather's been hot, but so have the markets, especially the equity markets. I'm glad to have Benji here with me that I do once a quarter or so, and it's great to have a chance to chat about what's going on in the markets.
Presenting the latest edition of the Market Commentary.
Yes, it's great to be able to join you again. It was about a quarter ago, as you mentioned, when we last met, and I think last time we were talking about the markets and we mentioned about the roller coaster that those markets were on. I think at that point it was more of the downward, people were nauseous type of roller coaster. But things changed actually pretty quickly, so catch us up a little bit on what things have happened.
Yeah, well, early in the year, just a quick history lesson again, the markets were down about 7% through the end of the first quarter on all of the negativity associated with the war in Iran, and then a quick bounce back. And at this point, we're up through the end of the second quarter about 20% in the markets here in the U.S. It's not taking the same shape that it's taken in the past. For the last couple of years, you and I have talked about the Magnificent Seven, those big technology companies that were driving like half of the market returns here in the U.S.
Yeah.
That's not the case this year. The Mag 7 are flat, and the rest of the market's up about 10%. And so we're still being driven by technology, but it's not those big seven that are driving things.
Yeah, it really has been an interesting change that we've had here.
Right.
So, but talk a little bit more about what other things in the stock market have been doing well so far this year.
Another thing that's shifted this year so far is that we're getting more leadership from international stocks. We call them international, but outside of the U.S.
Yep.
And it's not just been international stocks, it's been emerging markets. Emerging markets you would think of as a different category of country, not the developed markets that you would think of as Australia and maybe Japan and Europe, but the next tier down. But these are pretty developed markets too, like Taiwan, Korea. But a lot of those country markets are doing really well. Also on the AI trade. They're producing chips and other technology that's feeding into this artificial intelligence and data build out. So we talked about U.S. markets, international. Why don't you share a little bit more about what's going on in other parts of the markets around the world?
Yeah, so we talked a little bit about volatility that the stock market has, and of course there's another market that's been much more volatile than that, and that would be the oil market. And as would be expected, probably with the Iran conflict and the Strait of Hormuz and some of those pieces that have happened and the impact that's had on that market. But you think about it, it was oil was up almost 100% at one point, and then it fell 40% really pretty quickly on some of the ceasefire talk. When we think about oil, I mean, certainly in years past, and we're talking probably 30 or 40 years ago, the impact of some of those oil crises back then were much bigger than what this most recent one has been. Certainly it hits people's pocketbooks, not to minimize that whatsoever. But in terms of the inflation increase, there certainly has been some of that. But in terms of the impact, and I think you'll be sharing a little bit on the impact in terms of just the unemployment rate, and that really has been incredibly minimal. It's actually been surprising how little of an impact it's actually had. A reason for this, of course, is that the U.S. has really boosted the amount of oil production that they have, and they're actually a net oil exporter in some ways. Now it's kind of gasoline versus oil and some of those, but certainly the impact that we've had kind of net on markets, has been pretty minimal.
Right. I'm older than you, Benji, so I remember sitting in a gas line with my mom trying to buy gas back in the 70s when we had that embargo, and we were impacted by what was going on around the world in ways that we're not today.
Right.
So how about your favorite topic? We've waited long enough to talk about bonds. So what's going on in the bond markets?
Well, thank you. I'm glad that we decided to get into this. We talk about some of the things of bonds, and we've talked about kind of the bond market each time that we meet. And I think there have been some interesting things that have been happening. One of those is that inflation has increased a little bit. We talked about, and it was up kind of 1-ish% or so. I think one of the things that the bond market is maybe even more concerned about, not only that inflation has increased, but what the bond market normally thinks about is longer term, right? If it goes up 1% or so for a quarter, that's not nearly as big of a deal. If the market starts to believe that the Federal Reserve and the government isn't as concerned about bringing inflation back down, I think that's one of the things that's been happening, because bond yields, whether they're short term or long term, have increased. That means that bond prices have been falling. So that means that people that have bonds in their portfolio have experienced possibly, slightly negative returns, so far this year. So slightly negative, I'm talking like down 50 basis points or so, probably isn't a big impact, but people, if you think about a normal 60-40 portfolio, they'd probably rather have that 40% that would be up 3% instead of down 0.5% necessarily. But I think over the longer term, a little bit higher yields and kind of what this has been probably isn't going to be too big of an impact necessarily. Talk a little bit about, for us, the economy overall and kind of how things have been going. We talked a little bit about inflation, but cover some of the other topics too.
Well, surely the war in Iran is having an impact. It's it's not quite as direct perhaps as it would be when we're talking about prices, but it is rippling through the economy at least at some level. So headline prices did go up, as you mentioned, and inflation earlier in the year was coming in at about 4.2%. So above where we've been experiencing it recently. It's back down to maybe 3.5 at this point. So still, that means prices going up every year, and we're on this cycle where we've been above the target 2% that the Fed has told us to anchor on for years. And so inflation is just a constant erosion of our purchasing power along the way. GDP was okay during the first quarter. It was 1.5%. Or excuse me, it was 1.5% here in the second quarter. That's down a little bit from the first quarter. The consumer's doing okay. And GDP probably is going to end up in around 2% for the year. And that's about what it was last year. So kind of slower than what we've been taught to think is normal. 2.5 to 3 feels like it should be normal, but we're below that. And then lastly, the job market. We've talked about this a lot. The unemployment rate is running above 4%, which in any other decade you would say, it's not too bad. It's a pretty good number. We do think there's some obfuscation here that people are dropping out of the market, the labor market somewhat, and that is keeping a lid on the unemployment rate because of the way it's measured. And so there probably are more idle, unemployed people than what that rate is actually telling us. And so not major cracks there, but maybe something to watch in the future. So we got an economy that's doing okay. Inflation is a little too high for our liking. Unemployment has edged up a little bit. Economic growth is a little slow, but not too bad, all in all. So what are the things that you're looking forward to in the next couple of weeks in the markets?
So what are the markets concerned about? I think, the markets are still focused on the Iran war and what is the conflict going to be doing? Are we going to have a ceasefire that can be sustained, or is it going to kind of be this back and forth that we've had most recently? But I think the other thing too is the bond market especially is concerned about some of the changes with the Federal Reserve. And as new Chairman Warsh, is he going to be changing the number of meetings? Is there going to be less data that's going to be coming out? Are there those types of things? Because really what the bond market wants is more data, kind of more openness versus less, and that's kind of seems like the direction that it's going in.
Well, thanks for joining us this month, and thanks to you, Benji. That's always good to have you joining me here. As we've discussed, the markets have been volatile, but good for all of us. They've been generally volatile up, not down. There are a couple of things that are worth watching in the future, particularly the war in Iran and also in Ukraine, that could have significant impacts if they take a turn for the worse. So for our viewers, if this has you concerned or stressed, of course, like we always do, we invite you to connect with your Everence advisor, have a conversation about your specific situation so that you can orient your portfolio in a way that works for you and for your plans in the future. Until next month, goodbye. Thanks for joining us.